Let's talk about taxes. Many of us know we have to pay them. Most of us don't like paying them. Often we hear from clients, how do I only pay my fair share of taxes? Okay, well here's the thing. Often when they're asking this question, they're thinking of deductions. I don't know why, but we always think deductions first, deductions. And the reality is I'm going to give you pretty much the same answer as Google and any other CPA. Because there's just only so much you can deduct. That's not necessarily tapping into the kind of inner workings of our tax code, right? There's nothing wrong with it, but that's not going to make me unique. That's not going to be the best conversation that you and I can have as a client and a CPA. The best conversations that we can be having is, how do we position your assets? See, we're an asset repositioning firm, an asset protection firm. How do we position your assets in order to minimize your tax exposure, right? So how do we do this? Well, the best part is everyone can do it. It's just a willingness to do things differently. See, when you're talking about deductions, you're talking about things like your mortgage and your business travel and mileage and all those good things. We're all going to have the same answer. Often you're also going to hear your CPA say, you should defer all of your money into your 401k to get into a lower tax bracket. But the reality is for most people, that's not lowering your tax bracket. Again, we're going to have a deeper conversation. What we're going to talk about when we're meeting is, how do we reposition our assets to get the taxes over and done with? We're taxing the seed, not the harvest, and we can talk a little bit deeper about that. And we're going to go ahead and pay the least amount of tax over our lifetime. Okay, so here's the deal with taxes. The best conversation you could have with me about taxes is, how do we reposition those assets in order to minimize our tax exposure and pay the minimal amount of taxes, not for this year, not for next year, but over our lifetime. See, what we would do in one of our meetings is do what we call the retirement inventory. We would look at where all of your assets are sitting. We would look at what kind of exposure they have to taxes and to investment rate of return risk, and basically just investment risk. We would look at how can we maybe position them differently so that there still could be some potential cash flow up front if we're an investor, but that we can also minimize how much taxes we're going to have over our lifetime. It's a much deeper, more thorough, bigger picture that we're going to have. But in the end, if we just do a couple of little changes, I can guarantee you, you're going to pay way less tax over your lifetime. It's not nearly as hard as it sounds. And it's going to be a whole different conversation than just, can I deduct my cell phone expense or my business miles? We're going to go way deeper than that. If you have any questions about how to do that, what I would suggest is jump on our website or send us an email, and let's plan a strategy session and get started today.